Hey folks, Cam Hawkins here from the Trading Nut Podcast. Now, we've just done an hour-long interview with Dr. Thomas Carr, and he's been kind enough to provide us with a bit of insight into how he trades the stock market here. So you're going to get to see his live chart up and running, and he's going to talk us through one of the trades he took just before we did the show. So guys, over to Dr. Thomas. Now, if you do want to listen to the full interview, then head over to tradingnut.com for the full hour-long podcast that we did. All right, guys, see you there. Bye.
So here's that day trading win that we had in the Dr. Stoxx trading room today, which, by the way, is on StockTwits. They're the ones who manage the room. I just call the trading picks. And it was a gap up on earnings of LE, which is Land's End, the retailer. It's what we call a gap continuation, because the previous day was a green candle, quite a large green candle, in anticipation of the earnings, which normally means that once it opens up, you get an immediate sell-off, because all of the folks that bought the stock up here at this level are going to take advantage of that gap to get out of the trade. You want to buy this on a pullback in this sort of gap continuation move. So let's take a look at the intraday chart, which is the 5-minute chart. That's our primary day trading chart. And although I will scroll down to the 3-minute and 1-minute as well. But you can see here's the opening gap, and here's that initial sell-off that we anticipated would happen. It's not a bad idea to begin building a position down here, but I don't like to trade day trades too early. The first pullback can often lead to a second pullback. So I'm going to let this trade for a little while, which is exactly what we did. And it rallied about halfway up to the day's high. And what that does now is that establishes our support and resistance levels. So we would draw those in. Never even came back down to that support level, not a problem. And then we were going to look for, what we would look for from that point on is the first dip after the initial knee-jerk response. And that's what we got right here. So here we have this nice little pullback. It came close to tagging the 34 EMA bands that I use as a kind of cushion and area of support. Didn't quite get all the way there, but once it started to curl back up, this is where we started to buy the stock. So we bought it down just a little bit above $9 a share, $9.10, $9.15. We bought a little bit more. On this big green candle, we're now seeing a little bit more volume come in. Not much yet, but a little bit more price movement. We bought a little bit more. And then we watched as it tagged this area of resistance right here and sold off. So we took our profits right here about 960, having averaged in at about I think it was 921, 922. That was trade number one. We watched it come back down to near the bands again and then started to push off. So we started to buy it again. These 3 little green candles, we bought some. And then we really loaded up on this big green stick, the breakout move. I told everyone it's coming, it's coming, it's coming. You can just tell by these big green spikes, these big green spikes. It's not even dipping as far as the 34 bands. It's in a very steady uptrend. You just knew that this was going to test the high of the day, and it sure did. So we had some down here at around 945 to 955. We bought some more up here at around 985. And then it had a little test of the resistance, and it was off to the races just into the close of the day. We sold at 1068 on the end of the day close. 2 really nice day trades there, netted us very, very nice profit. I think it was a total of about 8-9% on the day in one stock. So good stuff. Anyway, that's a breakdown of a typical day trade that we do, and there you go.